If you want instant access to new videos as they're uploaded, then please click on the subscribe button. Also, don't forget to comment on the videos, and if you're interested in learning more about BetAngel, visit betangel.com today and download a free trial. So it's the US Masters at Augusta at the moment. It's one of my favourite golf tournaments of the year, and that's for a number of reasons, but you get a slightly smaller field here, which means that you tend to focus your attention on a smaller number of players. But also because it's the first and it's at this time of year, you get to spend a bit more time on it. You're not so stressed with 10,000 other sports as well. So it works quite well from that particular perspective. But golf trading is something I've done for quite a number of years actually. And it's an oddity because the problem that you tend to have is you only get massive liquidity around the very large featured events such as the majors. Now, you do get some liquidity at the PGA for some of the PGA Tour events, but they don't tend to be anywhere near as big as the majors. So I tend to stick to the majors nowadays simply because of the amount of liquidity. But the US Masters always does a very large volume. It's at a nice time of the day, and I generally enjoy it, and I've always done pretty well from it. And year after year, my results have been getting bigger and bigger, so I'm going to try and get another big result this year. See what we can do. But golf is a funny thing to trade because you've got so many players and they tend to be out on the course all of the time as well. So that presents all sorts of opportunities and issues for you depending upon which way you choose to look at things. But I've always found that golf's been very tradable. Golf is inherently uncertain. If you've ever played golf, you'll know this. It's very tricky to be able to remain consistent. But there are trends that develop within golf that make it tradable. From a sports trading perspective. If you look before a tournament starts, then one of the things that you learn very quickly, and you'll know this if you play golf as well, is that golf is a confidence game. And if you're high in confidence and you're striking the ball well, then anything's possible really. It's perfectly possible to be able to continue that. And if you're relaxed and you're hitting the ball well, everything works well. But if you're not, then things tend to get a little bit harder, and the ball, seems to shrink in size. It always seems to have a bad lie, and the edge of the green always seems a million miles away. So golf is about confidence, and therefore players that tend to play well at certain tournaments have generally had a string of good results. So you find that very often. And what tends to happen is, as you go into a golf tournament, if you're looking at backing somebody before the off and trading out at some point during the tournament, then you would tend to favour players that have been playing particularly well fairly recently. And they tend to carry that form forward, simply because they're higher in confidence and therefore nothing seems to be a major issue for them. The opposite can happen as well. Players that are at very, very short prices or much talked about in the media, if they haven't been on a good run, then they're potential lay to back candidates at the start of a tournament. So, there are a range of different sites that will show you previous results in previous tournaments, and that will be a bearing factor on what you do when you're trading before the off and looking to trade out when the tournament is underway. But one of the reasons that I like Augusta is that it's very easy to understand the course. So if you look at day 2 at Augusta, one of the opportunities that you'll find is, there are going to be 97 players out there. There's 140 odd when you get to the Open or one of the PGA events. And they all have to tee off at different times because obviously you can't just chuck them all on T1 and let them go. So they stagger the start times. So when you get to the second day of a 4-day tournament, what you'll find is that there will be a dominant leader that's out there. And when you have that dominant leader, depending upon when they start, will determine how the odds move for the rest of that particular day. So let's take a couple of scenarios here. You have a dominant leader, and he's at a very short price in the market. He tees off early and completes his round and goes into the clubhouse. So at that point, all of the people out on course will have a benchmark for the score that they need to hit to be able to catch him. And as a consequence, his price will move even though he's actually not out and on the course. So you can imagine the scenario where the guy is in the clubhouse, he has a few shots lead and he's priced at 3.5 or 4 or something like that. And as players go round the course, if they actually start eating into that lead, then obviously his price will start to drift. But if they start to fall away and things go all wrong, then basically his price will shorten. So you can trade the leader in the market, even though he's actually not out on course, which is one of the curiosities about golf. But in order to do that, you need to understand the course. And this is why I like Augusta, because it's very easy to understand the course. They play there every year at the same time. And as a consequence, you get to know how the course plays and where the key points are as well. Also bear in mind weather, because if the wind picks up mid to late afternoon, that's obviously going to make a course harder to play than if there's no wind at all when the first guy tees off in the morning. So from day 2 onwards, when the lead has been established, those things will have a factor. How the course plays, the weather, what the tee time is of people chasing that leader, will all have a factor in the way that the odds will move. But like I said, Augusta's great because you can actually predict the way that the course is likely to play. So hopefully these graphics will appear on the screen. But it's interesting that there are 3 holes at Augusta where it's easier to gain a shot than it is to drop. All the remaining holes, it's easier to drop a shot than it is to gain. So if you look at this blue line, that's giving you the percentage chance of gaining on a particular hole. And if you look at the other line, that is the chance of dropping a shot. So you can see there are only 3 holes where it's more likely that you'll gain a shot than you will drop. So predominantly, the characteristic of Augusta is to drop shots. But the reason we're looking at this is, say, we've got a leader in the clubhouse or who isn't on the course. You're interested in the chasing pack and where they're likely to pick up shots or drop shots. That's the key factor to how you would trade golf. So if you look at this next image, this is basically saying the chance of a player playing at Augusta dropping a shot on a particular hole. So you can see on hole 11, it's interesting actually. I should backtrack before I show this graphic, because every single course that's out there you will get a scorecard for. That scorecard will have a stroke index or a handicap on there, which will tell you how hard each individual hole is. But the problem is, that's great, and you look at a lot of the previews and the betting previews, and they talk extensively about how each hole plays. Well, that's interesting, but it doesn't tell you anything from a trading perspective. What you need to know is what's the chance of a shot being dropped or gained at any one particular hole. That's the key element of it. Even if you've got the stroke index, it will tell you the hardest and the easiest holes, but it won't tell you the percentage chance that something will go wrong at that hole, and that's what you need. So anyway, at Augusta, the chance of dropping a shot is highest at hole 11. So there's a sort of mid-30s chance almost of dropping a shot at hole 11. Hole 15, you only get about sort of 8-9% of people drop a shot at hole 15. So that you can see from the graph that we've put up on the screen here, the chance of dropping a shot varies quite dramatically across the entire course, and that's predominantly what we're looking at, because if you think that a player that's chasing the leader is about to drop a shot, could drop a shot, then obviously you would back the current leader, especially if you're in the clubhouse, because then their price is likely to shorten. But typically where this is best used is on an individual hole basis. It's very hard to figure out where somebody's going to drop a shot, so you start to group those together. So every course that ever gets played, I'll create this list to try and work out where I think shots are likely to be dropped or gained. And at Augusta it's easy because we've got so much information. They play there every year, and therefore it makes it very easy to figure out which are the hardest and easiest holes and to actually pin a number on that. So what I tend to do is I tend to group them into holes of 3. So I go 1 to 3, 2 to 4, blah, 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 blah. And that gives me an idea of when they're going to go into a harder period within that particular round. Are they entering a period where it's quite possible that they could actually drop a shot, or are they going to go through a period where it's relatively safe and therefore you can hold your position and wait to see how things pan out. So if you look at this image here, you can basically see that the chance of dropping a shot in this particular section between, let's say, holes 4 to 7, you can see actually there's a fair chance of you dropping a shot at that particular point. But you can see typically that between holes 10 and 12 is where most shots are dropped. And then you can see between 13 and 15 that's not the case, but then it accelerates rapidly as we go towards the end of the particular round. So by looking at previous statistics at certain courses, you can actually get a view for how a course is likely to play and how that will influence how you would expect to trade it. Now, Augusta is unique in that they play there every year, so you get some really good quality stats. When you look at most of the other majors, they work on a rotation basis. So the problem is they don't return to the same course for a few years. So that makes the statistics a little bit harder to pull together. And that's typically why I like Augusta, because I find it very easy to read that particular course because it's the same one. And there are subtle differences every year, but more or less it's very easy to understand. Whereas when you look at a lot of the other courses, they play very differently, and they may have changed a fair bit since they were last on rotation. That said, we've got the British Open is at St Andrews this year, so that plays in a certain style and a certain way. But when you're looking at links golf, that plays different from when you're looking at sort of golf that's sort of played at a place like Augusta. Two different styles of golf, essentially, two different ways to play it, and it favours different types of players. So, I mean, there is actually a huge amount of depth in golf in terms of how you want to analyse it and what you want to do. But hopefully that's given you a few clues as to the best way to engage, particularly at Augusta. If you're interested in learning more about BetAngel, visit betangel.com and download a free trial today.